Welcome back. We're starting the keynote session, Seizing Opportunities in a New Era. But before I do, I wanted to remind you that the Wi-Fi password is welcome guest, no space. And once you're on Wi-Fi, you could download the app. The password for the app is India, New York, using your email address as the sign-on. Any problems downloading the app or accessing Wi-Fi, you could see the text right outside the door at the break. Once again, I'm pleased to introduce the session chair, Anil Bhandari, Senior Vice President, Investments, Morgan Stanley Investment Management.
Thank you. Thank you, Jeffrey. I know the traffic has been horrendous today because of the UN and the Clinton Global Initiative. So if some of you experience that, then obviously we fully understand that. However, welcome to the 10th anniversary of the India Investment Institutional Investor India Forum. The key question over the last few years has been troubling for a lot of investors, and they have lost confidence, or they had lost confidence to provide whether India could really provide a sustainable growth pattern and promoting economic growth. And the investors were concerned about two aspects looking in. One was the corruption, and the second was the bureaucracy, because the corruption got into the bloodstream of Indians. However, over the last few months, with Prime Minister Modi coming in, the whole euphoria in India has changed completely. It has become a positive euphoria. Global confidence has improved. And in this session, we have four eminent personalities who will talk about the four economic pillars. Let me first introduce you to the four speakers. First, we have Dr. Ajit Ranade. He is the renowned chief economist of the Aditya Birla Group. By the way, Aditya Birla Group, Mr. Aditya Birla was the first gentleman who gave me my first deal in India on Hindalco. So I have a special allegiance to the Aditya Birla Group. Dr. Ranade will speak about the current state of the economy, the inflation in India, the rupee, where it has come from, where it's going, and the interest rates. So those are all key items of interest to all of us who are interested in investing in India or looking at India from one point or the other. Then after that, we've got the eminent Mr. Ashish Chauhan, who is the president of the 140-year-old Bombay Stock Exchange, one of the most famous stock exchanges like the New York Stock Exchange. Mr. Chauhan will talk about the outstanding Sensex performance year to date. He will also talk about the Singapore-Mauritius treaties, which have been talked about recently. He will also give us his point of view of how he's interacting with SEBI, which has become an integral part of the whole process of investing. And lastly, he'll touch on the corporate governance, which is a very significant factor. Then we have Teresa Barger. She will give us a perspective. She is the CEO of Cartica Capital. Cartica Capital has been investing in India. So they've invested a substantial amount in India. So she'll give us her perspective of what her experience has been on the ground, investing in India, and how they see going forward the atmosphere to invest more in India, and what will propel her, what are the nuances of India versus, because they invest in all the emerging markets. So what is her expression to basically invest more into India? Then we have Mr. Umang Vohra. He is the president of Dr. Reddy's lab. Now, Dr. Reddy's is one of the few companies that has become listed on the New York Stock Exchange, ADRs. Am I correct, Umang?
That's right.
And so he will give us a perspective on how they have reacted or how Indian companies have managed the acquisitions of companies overseas. So he will give us a global perspective sitting in an Indian company, as well as talk a little bit about the healthcare prospects in India. So now I'm going to open it up first to Dr. Ranade, to basically his comments. And after the four speakers are done, again, as I had indicated in my earlier session, there are notes, papers on your chairs. So if anybody has any questions, please write those. The staff will bring those to me, and I will direct it to the appropriate speaker. Dr. Ranade. Go ahead.
Thank you, Anil. Thank you. And good morning, everybody. So Obama is in town and Mr. Clinton is in town, therefore all the chaotic traffic and so on. But it must be mentioned, one thing we have to mention, even though Mr. Mike Watts mentioned it in his presentation, about the news that's come out this morning that the Mars landing. So just to kind of put it in perspective, apparently in the last 30 years or so, there have been 51 attempts to do a Mars landing, and there's been only 21 of them which were successful, and none of them have been successful in the first attempt. So this is a big deal, and the fact that this whole mission, which was almost a year-long mission, was done at a cost of something like $70 million, which is 1/10 the cost of NASA, because NASA also had a probe a vehicle going at the same time and landed just about a week ago. So I think this is a big deal. And the reason I want to mention it is perhaps the timing of it is also opportune, because this landing, Mars landing, signifies a few things, which is what the new government led by Prime Minister Modi is trying to perhaps usher. And there's a big event happening tomorrow, which is that this stands for, as I said, cost leadership maybe, but frugal innovation, indigenous innovation, the power of teamwork. There's a huge team in the Indian Space Research Organization behind this thing. The power of, the importance of getting it right. You have a probe 400 million kilometers away, and in fact, they had to trigger the combustion in the last phase of the combustion was to be triggered on, the engine had to be turned on, an engine which was dormant for 10 months and never tried. You're going to get it right in the first attempt. So various things. So I just could go on and on. So that's a big headline, and I think this sort of frugal indigenous innovation trying to get on with expanding the footprint of manufacturing in India, engineering. This is, by the way, an engineering feat. It's not a science feat, and some people call it scientists. But the other big headline that's come out of India this morning, and Anil made a casual mention about how in the last few years there's been some nervousness or some enchantment or about the state of investment, and partly he said that this perception about corruption. There's been a major Supreme Court judgment this morning or yesterday in India, which relates to the allocation of coal mine fields to private parties. This process, by the way, started in 1993. Coal sector remains a public sector monopoly, but since 1993, there's been a mechanism to allow private sector players to mine or have linkage. And there's been a major, I think, decision by the Supreme Court. The it's a culmination of a process which began almost 2.5 years ago. And you can read about it. I think this is going to have a very big impact on reforms in that sector. And it's a very big positive, according to me. So I think said all that. Current outlook. What's the current situation? Well, the last data we have is from the previous quarter, which was 5.7%, which is the highest in the last 2 years. Current account deficit, we had about a year ago, if you looked at India about a year, last July, there was panic, near panic, as the exchange rate just zoomed from something like 54 to 69, and with almost no end in sight. But over this last 13, 14 months, 12 months at least, the currency has been incredibly stable. So that's a big achievement, and it's also, India this year has so far got inflows, foreign inflows, portfolio inflows, the highest it has ever been. It's something like, I don't know, 35, 40 billion dollars, and we are not even through the year yet. So this is showing investor interest and confidence. We've also seen the current account deficit. You know, one of the panic factors, last year there were several factors, the biggest one being that innocuous comment made by the Federal Reserve Bank chairman then in May about possible QE taper, which caused all emerging market currencies, Turkey, Indonesia, South Africa, and India, to lose sharply. So there are many other factors, but one contributing factor was India's current account deficit, which was almost near 4%. That has come down to 1%. So what a sharp change in just 12 months. So on current account deficit, on GDP growth, on rupee, the currency stability, things are looking much better. I mean, you can say this, there are various fathers of this success, but I would say overall macroeconomic management looks much better. And of course, one should also give credit to the new Reserve Bank governor, Dr. Raghuram Rajan, who took office in September last year. Now, what are the challenges? So I think going ahead, we're going to see this thing slowly going up, 5.7, 5.8, perhaps we'll cross 6 next year. And I would say the outlook, the near-term outlook is for GDP growth rate to be around 6 to 6.5%. But what are the challenges then? I think the single biggest challenge is inflation. Unfortunately, India still has inflation rate, the retail inflation rate, which is about 8 or 9%. And in fact, if you looked at the Bloomberg chart from 2-3 months ago, there was a chart of about 50 countries around the world, all major countries, developing, developed countries, OECD, BRICS countries. In that chart, Indian inflation was the highest. Actually, second highest, the highest was Egypt. And this chart did not have Venezuela because it's now fallen off the charts. Nobody looks at it. But so if you ignore those outliers, that is the single, according to me, that's the biggest concern. What to do about India's inflation? It is still at the retail inflation. Now, I know that people in industry say, and I'm from industry, they say that the wholesale price inflation, which is what India used to track until last year, is actually at 3.7% and falling. The retail inflation or consumer inflation is what is now officially tracked by the Reserve Bank of India, is largely because of food inflation. So the challenge actually before India is to, how do you manage this food inflation? And there are critics who say, you cannot tackle food inflation by interest rate policy. But we can probably come back during the discussion on that. So I think that's the near term, that's a really immediate macroeconomic challenge. Medium term, so what happens is if you have inflation, that impacts interest rate policy, and that's going to impact your currency. So they go together. So in fact, we have a Reserve Bank, and in fact, as Teresa was saying, the governor of the Reserve Bank of India is rated as one of the best in the world in various sort of fora. So it's good that we have a good manager of monetary policy, and they are extremely focused on inflation. So they almost, even though they don't have a single inflation mandate, but the Reserve Bank of India seems to be focused on this problem. Although they have to balance the currency stability and macroeconomic stability and financial sector stability, but inflation is their biggest concern. So I think going ahead, we are not going to see interest rates slackening in the near future, perhaps next year. And hopefully we'll have a virtuous cycle of lower interest rates, higher investment and savings, higher GDP growth, higher tax collections, feeding into a lower fiscal deficit and lower interest rates. So that's the medium-term prognosis. I just want to quickly conclude by pointing out some long-term economic reforms that have been unleashed. Perhaps they're not really highlighted in the headlines. One is an indirect reform, which was the way the changes in the judicial commission, that is the way the judges are appointed. This was a reform pending for perhaps, 30 years. And one of the first decisions that was passed in Parliament was on the judicial commissions. The collegium system was reformed. Second was, you must have heard about this, that India has a commission called the Planning Commission, which comes from the older days of 5-year plans and so on, Soviet-style planning. It's been actually dismantled, and it is going to be replaced by something else which is not yet announced. but I think that has a major long-term consequence. We do need something in which will take care of center-state transfers, because India is still a federal entity. We have a way of transferring tax revenues to the states with a formula through a constitutional commission called the Finance Commission, but we don't have a mechanism to transfer funds to have balanced economic development. So to achieve that balance or to reduce the imbalance, you need something like the Planning Commission, but we don't know yet. But the fact that it's been revamped is a major step. Third example, the Jan Dhan Yojana, which is linking, 40% of India doesn't have a bank account. And that hinders various things like direct cash transfers, subsidy trimming, subsidy targeting, et cetera, et cetera. So the Prime Minister has announced that by, I don't know, next 2 or 3 years, everybody will have a bank account, and a large part of government interface will be direct cash transfer. That's a very big. Fourth example, Expenditure Reforms Commission. So these are all things which are not perhaps in the headlines, but I think these all have economic long-term consequences. And therefore, if you ask me what is likely scenario in a few years, I think hopefully we'll get back to that trajectory. As I said, the virtuous cycle we are looking at is what happened between 2003 and 2008, which is low interest rates, higher savings and investment, higher financial savings, higher GDP growth, therefore higher tax collections, therefore lower fiscal deficit, therefore lower interest rates. So this virtuous cycle, unfortunately, we for the last few years, we had higher interest rates, high inflation, and of course very low investment, slowing down of GDP growth, and a high fiscal and current account deficit. So getting out of this required a huge psychological, I think, to crack this cycle, and the electoral mandate, I think, partly contributed to it. So I'm running out of time. Maybe I'll come back to it later. Thank you.
Thank you. Ashish?
Good morning, ladies and gentlemen. It's a pleasure and honor to be in front of you. Basically, I was trying to figure out a theme to tell you on what's happening and what's going to happen in the policy circles. Of course, I've been told to also speak on the Sensex reaching 27,000 and giving 27% returns since the beginning of the year, that is the calendar year. Basically, I am an administrator of the exchange. I don't invest, nor I claim to know much about investments, except that I need to keep the stuff running. And so when I look back and when I look now, what strikes me most is that India is one of the most complex places to talk about. It's 2% of world land mass, accounting for 16% of world population, increasing in terms of population. And whatever you say in terms of good things about India, you get two bad things also about India coming up simultaneously. Like today morning, they talked about the MOM, the Mars orbiter mission, which went to the Mars, and same day we had 214 coal blocks out of 218 cancelled by the Supreme Court. So every time you have one good news, you will also have one bad news, and what is printed in New York Times and Wall Street Journal is the bad part of it. And so effectively, at the same time, it's a very complex place, and somebody mentioned about China today, I think in the first session, and that China has had what very lopsided kind of growth. But India also, in a sense, if you compare India with China, one is what strikes me most is the demographics. India is a very young country. Out of 1.3 billion people, half, 650 million are below age 25. And that's a huge number, getting them skilled, getting them into jobs, and at the same time, sort of when they come into the job market, the growth that is possible is phenomenal. And the second part between India and China is basically, in China, everything is in somewhere connected to the government. 80% of the actual activities are connected to the government, and in India, it is exactly opposite. Whatever works is largely not connected to the government. And so effectively, it's, the private sector is actually improving its stake year by year, and that's a very interesting framework. Second is the demographics part, because India is very young and China is suddenly old. I've been told by 2017, the number of Chinese coming into the job market would be lower first time over last 40, 50 years. first time it will be, the number coming into the job market will be lower compared to the previous year. It's actually increasing the job, the cost of employment and so on and so forth. And India is there with huge number of people wanting to take those jobs. And so for me, it's interesting. Yesterday, I was sitting with another a large investor in India, and they also invest in many countries. And he told me that 3 months back or 6 months back, we were basically looking at two countries, Brazil and India. And India has given a huge mandate to the new prime minister, almost 60-65% seats, while as Brazil is not looking so good. So effectively, we are increasing the allocation to India. And I was pretty impressed by this kind of arguments. But again, when things look so good, sometimes you also worry that what's going to happen in terms of the frameworks. Today morning, when I was just standing outside, one of the largest industrialists of India told me that, are you ready? If we get $100 billion in a year of investments from abroad, which is currently $25-30 billion, are you ready as an exchange? Are you ready? Are you interested only in trading yourselves? Basically, over the last 7 to 8 years, from 2007 onwards, most exchanges in the world have become basically trading venues. We trade for the sake of trading. And we don't worry about the capital raising. That is true for New York Stock Exchange, that is true for Shanghai, Shenzhen, and many exchanges. And I told him that for us, the main focus of BSE is to help India create the capital. And over the last 140 years since we have been in existence, we have helped India create $1.6 trillion of wealth. And hopefully, over the next 20-30 years, it will be $16 trillion. So effectively, what we have done in terms of the framework is that we have now 2 large exchanges. We used to have 29 exchanges before. We have now practically 2 exchanges which work. One is called Bombay Stock Exchange, and the other is National Stock Exchange. That is basically underneath the stock exchanges. We have the clearing corporations, that is CCPs as they are known. And CCPs basically give the guarantees for the settlement. And then underneath them, we have depositories, which keep your stocks and so on and so forth. Over the last 20 years, from a completely floor-based, certificate-based, physical certificate-based economy, we have converted ourselves into exchanges which are really fast. Today, BSE gives you a response time of 200 microseconds or less. Every time you place an order on BSE, we give you a confirmation, as we call acknowledgement, in less than 200 microseconds. In 1 second, there are 1 million microseconds. And we give you a response of 1 by 5,000th of a second. In next 3 years, we'll be reaching 20 microseconds. That is 10 times faster. There's 1 by 50,000th of a second. That's basically about speed. But in terms of the scale, BSE is able to handle today 500,000 orders in a second, 500,000 orders a second. So I was just explaining to him that today, given the way we work, we would be able to take more orders than the entire US, all exchanges, all alternative venues, all the dark pools and so on and so forth combined. We have that type of capacity. And to give you a response time of 200 microseconds, basically that's where we are. India is a technologically advanced country, but effectively that's what we have been able to set up for all of you. The other thing is about getting all the instruments into one place. Today you can trade on BSE, on equities, on equity derivatives, on interest rate futures, on mutual funds, on ETFs, on debt of all types, securitized debts, and government debts, and private debt, and so on and so forth. IPOs are now done in India through the screens, this lending and borrowing. And what is coming now is REITs. That is the latest project we have that is allowing real estate investment trusts to be listed on the Indian exchanges. And that's going to happen over the next couple of months. Currently, the regulator is in the process of finalizing the guidelines for allowing investments in the real estate investment trust. And BSE is also going to announce the regulations of BSE along with that. So as and when there are a huge number of real estate players wanting to come and list on BSE their investment trust. Today, BSE has 5,458 companies listed, largest in the world. It's 10th largest in the market cap in the world, 3rd largest currency futures exchange in the world, second largest currency options in the world, third largest index options in the world, and seventh largest stock exchange in terms of trading in the world. So effectively, we have some of the largest and highest amount of trading that is happening. For foreign institutional investor, many of you are. Recently, we have come out with newer regulations at India level, where earlier you had to register yourselves with the regulator himself, which is called SEBI, Securities and Exchange Board of India. New regulations called FPI regulations, that is foreign portfolio investor regulations. They allow even a housewife sitting in US or Japan to trade on India. Earlier, we couldn't do that, and that brings me to the perspective of Mauritius. When India started liberalizing its own policies, it had two choices: to clean up the entire framework on taxation, or allow a framework for foreigners to invest in India through another framework, and that was the Mauritius activities, that you can actually invest through Mauritius, and you get a very good tax avoidance treaty with Mauritius, and now, of course, with many other countries. But Mauritius and Singapore are talked quite a lot. This new government has been in existence for almost 4 months now, a little more, but they have not taken any radical decisions on most aspects. And my hope is that Mauritius and Singapore, both tax treaties, would continue, because again, this government knows that India needs to invest around $1.5 trillion over the next 5 to 6 years in just creating infrastructure, and annoying the foreign institutional investors is not that they want to do. And so for me, I have a hope and a belief that the government...
We're running out of time. We'll come back to you.
Sure.
So I would like to just say that we'll come back to some questions.
Sure. And two more things. One is the depository receipts framework has been newly announced, which allows Indian companies which are not listed on Indian exchanges to now start trading even abroad, including in US. And there is interest rate futures market that is just coming up with that. Thank you very much.
Thank you. Teresa.
Thank you very much. Delighted to be here. I just wanted to introduce my remarks by saying that we at Cartica invest only in listed equities. We can invest in any of the 22 countries of the emerging markets. We seek to have only about 20 companies in the portfolio, because we engage with each company. And I also want to say that we choose countries first and then choose companies, and there's a long reasoning for that. But I want to emphasize we're very, very off benchmark, and we have about 50% of our entire portfolio in just 2 countries, Philippines and India. And we have over 20% of our portfolio in India. That said, we don't love India. India is a mess. India is one of the most difficult places on earth to start a country, to start a company. 179 out of 189 countries of the world, which leaves over Equatorial Guinea or something. To enforce a contract takes 4 to 5 years. Only 3 countries are worse than that. Remind me not to go to those 3 countries. However, it's really easy to get credit, number 24 in the world. So if you're a big connected company, you can go to a PSU bank and get money, no problem. And you don't have to pay it back, because India is one of the worst countries in the world to resolve insolvency. And so we as foreign investors really want this government to pay attention to the NPL problem, because it is one of those back burner things that we think should be in the front. It also has a terrible infrastructure. You cannot get around the cities. Energy shortages, we're despairing about what's going on in the south. The labor laws are so terrible that at least 70% of people outside the government sector are forced to be informal workers. They're also, buying land is a nightmare, and virtually no company has invested CapEx for the last 3 years in India. They have searched bargains in Europe. We don't love many of those bargains. Okay, so we're not in love. So why does Cartica like India? There are really 2 reasons. One is that the situation is so terrible that a little reform will go a long way. There is lots of low-hanging fruit in the policy area, and Mr. Modi has already made a start, particularly on some of these small changes that are indicative of a desire to get rid of all of this red tape that's constrained all of us. We're hopeful that after the state election in Maharashtra in 2015, then we'll see some big reforms. And we're hopeful we're also going to see those at the state level, because frankly, a lot of things are going to have to start at the state level. Hopefully not just the BJP-controlled states, but that other people will take some comfort from the wonderful things we heard about what Mr. Modi has done in Gujarat. And last week was the first time that I saw data that's showing that investment in India is actually starting to rise. So what's the second reason that we like India? Well, it's perhaps the cleanest dirty shirt, particularly among the BRICS, but maybe the EMs. So all of you go travel around the world, so you know you go with your little carry-on, and after 8 days, you think, oh goodness, what is the cleanest of my dirty shirts that I can get away with wearing today, right? So India is the cleanest dirty shirt of the BRICS without a doubt. Brazil's economy is in recession, and structurally it is broken. China is trying to wean itself from its addiction to fixed asset investment, and 2 other countries have tried, without getting growth to slow too much, 2 other countries have tried this and failed, South Korea and Japan, and these are really also very smart countries. Russia had a great 10-year run where they had wages and pensions growing at 2 to 3 times GDP, and those people spent their money. It was fantastic. That is either on temporary hold or permanently over. Outside the BRICS, we only like the Philippines, Mexico, Colombia, and maybe Poland. It just ain't a lot. I'll also have to give a nod to our friend, Mr. Chauhan. Where India does stand out is in the attempts of the stock exchange and SEBI to protect minority investors. It's in the top 17% of countries in their policies, and we're seeing a lot of enforcement action now coming. I will have to say that pretty much all listed companies are controlled by a founder or a family, and therefore we still believe one has to do extensive due diligence on the integrity of the promoter to make sure that they're not going to siphon off any money maybe for their family, or maybe take some trips on the company budget, et cetera, but that they will treat minority shareholders the same way they would treat themselves. So after one does that homework on the integrity of the sponsor, then I think one can have a lot of success in picking specific companies in India and benefit as India gets a little less messy. Thank you.
Thank you, Teresa.
Okay, thank you first of all for having me here. It's a pleasure to be here. I represent an Indian corporation which is based out of India but rapidly expanding into other parts of the world. We're also listed, as Anil said, in the New York Stock Exchange. So now that you have the Economist telling you that India, the future is bright, it's entering a virtuous cycle, you have the governance guardians telling you that they have the framework to make sure that everything goes right, and you have investors who like to invest in India because it's really at the bottom of the pit, right? What are companies doing about it? So I'm going to try and address a little bit of how we're thinking through this, right? Some of these views may be similar to how people have shared. Some of them could be a little different, right? But I think as we look at our company and we look at sectors that are closer to our company, we look at education, we look at healthcare, we look at maybe even to some extent banking. We believe that India is uniquely poised today to create the access and affordability, right? 2 key themes that are becoming common across the developed world as well as the developing world. So let me explain that a little bit. We believe the fundamental innovation in healthcare, education, to some extent even banking, right, is going to find its presence out of what India is going to do, right? It's going to be enabled by technology, right? It's going to be enabled
by the ability of sensors and the cost of sensors, which is rapidly declining. So whether you're a healthcare company or an education company, remember, sensors play a large role in how you reach many people across the world, right? We believe that the ability for Indian companies to scale up and offer technology solutions is just apt for them to be able to scale their services in the domestic market. We think that the access and affordability that India creates for its domestic market is going to be fundamentally very pivotal to the rest of to the way the world looks at that market, right? So I will give you an example of healthcare. I don't know how many of you in this room know, but 30% of medicines that are sold today in the United States have their origin back in India, right? And that's what? Lower cost, higher productivity, right? And the ability to find the right talent, the right chemist, the right talent, has an impact in terms of the healthcare saving and potential in the US alone, right? We're going to see the same effect, this healthcare revolution, or to some extent, and I would like to probably even think about 5 years or 10 years ahead, and the education side of things. This is exactly how Indian sectors are going to evolve. They're going to be taking this model, the model that they've perfected of access and affordability in the domestic market, try and take this model to the developed markets, take it to the US, take it to markets in Africa, which probably deal with similar consequences, and other parts of the developed world in Europe, right? So this is a trend which is waiting to happen. Indian companies, especially ours, are looking at two key themes, access and affordability. And I'm just going to say this again because the challenges are different. The challenge for access and affordability in India is structural, right? The challenge for access and affordability in the Western markets is more budget-driven, more financial constraint-driven, right? Because the US can't pay for 17% of healthcare to perpetuity. India is still paying only less than 2% of GDP as healthcare, right? So that's the potential we see in both sides of the world. I will say, as an organization, and I'll promise, Anil, that I will finish exactly on time, so they don't have to. But I think as a company that needs to do this, as one of the companies in sectors like education, healthcare, there are 4 things that we want support on from the government, right? And I think one was already highlighted. The first is just to stay the course on governance. It's fundamentally, it's fundamentally empirical to see schemes that have run with good governance have achieved their objectives. What are the top 2 that I can think of? One is the unique identification number scheme. The second is the eradication of polio, right? I don't know how many of you are aware that India was one of these last countries that had to battle polio eradication, right? And eventually ended up doing it with the support of the Bill and Melinda Gates Foundation. So strong governance has a very strong fundamental thesis in the India growth journey. We're hoping that the states and the states and the center can actually come together to do it. The environment has never been right. The second, and I think this is most fundamental, we've spoken about giving cash to, to the people in the villages in India, et cetera, but it is kind of unsettling that the amount of influence education and health have on affordability, right? So it's very often the distinction between a family in the rural setting, which is actually between being poor and just about making its needs met. Remember, India is not an insured market, right? India is an out-of-pocket market. Most of the people who actually tend and care for the sick ones actually end up not being able to afford their own survival, right? So insurance and in some form education subsidies are extremely important for India to progress this curve. The third, and this is actually a plea to regulators, the more we network our regulators with the rest of the world, the faster and easier is it going to be for Indian companies to globalize, right? So we have the Bombay Stock Exchange, SEBI, they're doing a great job, right? But let's talk about other regulators. Let's talk about the FDA. How well connected are they with the Indian regulators, especially since 30% of the medicines in the US have their origin in India, right? So regulation and the coming together of that fundamentally transforms the way companies could compete in different markets and markets that Indian companies go to. And the fourth thing is I'm really excited about a couple of facts, right? I'm excited about the fact that in this age of technology, this age of declining cost of sensors, this age in the ability to do data analytics, right? Indian companies are at the forefront, right? We export data analytics, computing power to the rest of the world. We're beginning to take big steps in sensor technology. We've got the best mobile telephony networks in the world. You'll be surprised at the amount of number we're going to cover. But look at these facts. 50% of rural households in India only have mobile telephony, right? 70% of them are untouched, undiagnosed from a healthcare perspective, possibly even from a literacy perspective, right? So think of the amount of innovation that can happen just with the three of these coming together domestically and how that model could be exported out. So we're really looking forward to some amount of government and private entrepreneurship in making this happen for the companies in India, for the domestic market, as well as going out. So we're really excited about being an Indian company, being at this part of the change, and making sure that some of this can get exported outside. So I'll end with that. I think I stuck to my 7 minutes, Anil.
Thank you.
Thank you very much.
Thank you. Since we are running short on time, I'm going to take the liberty of asking the questions which I think would be pertinent to all of us. Dr. Ranade, you made a comment on interest rate scenario, that possibly it could go down over the next 5 years, 3 years, whatever, because nobody can predict interest rates. What I call is that we are in a global market, which depending on the country, we can term it as a bear market or a bull market. And a lot of people are saying that India is in a bull market. I call it the wolf market. Because by the term wolf, I mean the computers are the wolf packs. They act together and they basically drive up. So this is the investors coming in. However, it is very interest rate related. So if the interest rates drop, what impact do you see on the rupee? Because if the rupee is the currency which is the report card of the country, as I call it. So rupee has devalued about 4% a year if I look at it, and it's done in steps. So as investors, if I'm investing in India, I want to be looking at it and saying, where does the rupee go over the next short term or a long term? So could you address that related to interest rates?
Anil, just very quickly, the rupee was at 50 in 2002 May. So we're talking about 12 years ago. Rupee was at 50. Today, 12 years later, it is at 60. So in 12 years, it's gone down by about, how much is it, 20%?
It's about 4% a year. We calculated going back to 30 years?
No, it's not. It's less than that. It's about 2%, 1.5% per year. So in fact, if you don't focus only on very short-term volatility, I told you last year the volatility was a lot of it was induced because of external forces. So going ahead, I would say, look at the inflation differential between, say, the dollar economy and the rupee economy. And that is pretty much a good indication of how the rupee will behave. So I personally think, even though we have prospects for higher growth, we have 5.7 today, perhaps going up to 6.5 next year and thereafter. We do have improving situation on both the fiscal and the current account deficit. But there is this inflation differential, which is going to, and there's of course, infrastructure stuff and so on. On balance, I think there's a 1% bias towards depreciation.
So what you see, the rupee depreciating about 1% a year? Is that what you're saying?
That's
okay. So as far as investors are concerned, they should figure in about a 1% depreciation on the rupee.
But also, please keep in mind that now investors have many more avenues of hedging their currency risks, which perhaps were not available earlier, offshore and onshore.
Thank you very much. Ashish, you've done a tremendous job getting the Bombay Stock Exchange, managing, and of course launching new products, listing them. In this country, one of the key questions has been insider trading. How do you address insider trading in India? Because that seems to be still an eminent portion of the trading that happens out there. The founders of the companies, they treat it, even though they might have a minority stake, they treat it as their company as a majority shareholders. And a lot of small companies, mid companies that have been listed on the exchange have insider trading problems. How do you handle that? How do you address that? How do we see it going forward?
I think there are a few sort of unrelated activities or related activities in one single question. Basically, one is relating to the related party transactions, as we call it. It has nothing to do with insider trading of the stock, but basically if the promoters, who are also managers, we call owner managers. In US, you are probably third layer in sense that owners are different from managers. And in India, it's still the owner managers who kind of run the company and they have a significant stake in the company. So in the cases where they are using the company money for the private trips or for sort of giving it some of that money to their families, and that has been well taken care of in the new companies bill today that has been passed in 2013, which says that any company where related party transactions are there, they need to bring out those related party transactions to the annual general meeting of the company shareholders, and the promoters will not participate in the voting. So basically what has been done is that conflict of interest which is there between the owners and managers when you are both, that has been taken care of by saying that the promoters will not participate in the related party transactions voting related activities, and that's
and you can ensure that.
Yeah, we are ensuring that, and that's a huge change from before 2013, and in fact it's getting implemented as we talk. Although the act was passed last year, the rules and regulations are coming as we talk, and so we are quite clear that this is going to resolve that owner-manager as the same entity issue quite a lot. On the insider trading, that is the stocks trade and people do trade before information is made public. And there, the regulations are becoming tightened now. In fact, we are going to announce, I mean, there is a concept of materiality. That is, what is material to disclose to people and what is not. There are kind of different interpretations. So we are going to announce what is minimum material. Of course, you need to figure out the additional part. But minimum, what is material event, whether you have a strike, whether you have a fire, whether you have a new oil find or whatever. So we are going to write that down and ensure that nobody has a confusion on that part of it. So, and second thing is anytime a board meeting happens, within 15 minutes, they are supposed to report into the exchanges, and exchange reporting mechanism is totally automated. So any company today wants to report their material events or the results or anything, they load it through the internet onto our portal, and after confirming with them that they have loaded, because many times you can have hacking and so on and so forth. So once that is confirmed, it goes automatically into the public domain.
So will you hold the insiders trading, like this country is becoming so particular, they're basically getting even the higher ups and putting them behind in the courtroom. So is India going to be able to accomplish that out there for the insider trading? Because insider trading is rampant in the small cap and the mid caps.
No, it is true. And in a sense, Indian regulators, I mean, they have even got insider trading or what we call front-running cases against mutual fund managers.
Yes.
And so Indian regulator, the Securities and Exchange Board of India, is very, very clear and very active on this front. And I have no doubt in my mind that India, I mean, again, compared to China, I mean, as she said, India is far ahead.
The clean shirt. That's the clean shirt and the dirty laundry.
And on the corporate governance side, we are by far amongst the top few percentile countries. And as I mean, everyone knows, we are 17% of world population, right?
So Ashish, you've done a great job. I think from an investor standpoint, if you would be at least putting that in the forefront, insider trading, because that has been on the top of the minds of the global investors as far as India, and I'm a big proponent of India. I'm a bull on India. So I just think that those are the issues that you need to basically address going forward. Teresa.
Anil, I'm just going to excuse myself. Don't want to be rude.
I need to ask you one question, though.
I have to run.
Okay, one question, and then you can go.
Teresa. Yeah, sorry.
I'll skip Teresa, I'll come back to you. You are a global company. The lot of Indian companies have gone into joint ventures. A lot of notoriety, or at least negative publicity, has been written about generics being manufactured in India. Could you address that? How you're going to be overcoming the generics, which is you don't satisfy the FDA rulings, and the generics have a problem with the adulteration and so on.
Yeah, I think for us it's fundamentally making sure that we have one pill that sells all over the world with the same quality. Right, so it's not following two different regulatory systems. It's following, possibly if the FDA is the most stringent, following that system and trying to align our cultures, practices, automation at each plant level with those cultures.
Does India have a FDA type which is as strict as that?
India has a regulator, right?
No, but as strict as the US?
Well, the US requirements are different, right? I wouldn't say stricter or not stricter, but I think the two regulators are talking, which is a great thing for India personally. And I think if the regulations kind of converge, Indian companies can globalize a lot faster. And I'm pretty clear.
Because
Umang,
thank you for your
time.
Thank you,
sorry.
But again, thanks a lot. And I think the companies should basically be cognizant of the generics because that is, again, a very growth business from India and export driven. So thank you very much for your time. Teresa, question for you. Yours was, of course, off the charts comments, which is should I invest in India, being that it's a dirty shirt? Clean shirt in a dirty laundry, I'm sorry.
Cleanest-
Clean shirt in a
cleanest
dirty
dirty
laundry,
shirt,
I beg
yeah.
your pardon, okay. Having heard all of this and having had experience with India, you still continue to say that you like India. And if you look at your track record over the last 2 decades or 1 decade, whenever you've invested in India, do you think that with the rupee being where it is or going where it is, as Dr. Ranade has pointed out, and with all these inherent problems that I have brought forth, what are your positives that would propel me as an investor, if I'm not invested in India, to go into India? So could you please give us your point of view?
I mean, one thing I think is this world-class central bank governor and who's targeting inflation. So that's very positive. And the movements macroeconomically already in the last year have been very positive. Obviously, we love reform. Reform's always a little hard to gauge because there are always opposition. There are always vested interests that don't like reform. But so far, the reform agenda looks great. And it's just a matter of execution and getting the state governments in there. And the other thing we like is there are some just superb management teams in India, world-class, great managers. There are also, if you look at the chart of management practices in India, on the whole, management practices are terrible, but that's because companies cannot go bankrupt. And it's the same thing in Brazil. It takes forever to go bankrupt. But if you're on the other end of that tail, spectacularly good management teams in India. And then you have a huge growth opportunity for what we call convergence
good with numbers.
or SJs.
We are very good with numbers.
They're very good
with
with
numbers. We can play with numbers any way you want.
I'd like some Indian managers to stop focusing solely on cutting costs and now also focus on other things that really grow their business, including advertising, right? I mean, anathema to a lot of people. But there are growth opportunities in India, unlike almost any other emerging market.
Thank you very much, my panel. Again, I hope this has been informative and interesting session. And again, I think concluding from this is India has a new direction, India has new opportunities, and we are looking forward to seizing those new opportunities and new direction. Thank you very much.
Thank you.
Thank you.